We have got to talk about what the Fed meeting can do to the market, so pay attention. In this video, I am Dr. Stock, Doctor of Education, and did you hear about the hipster who burned his mouth while eating pizza? It's because he ate the pizza before it was cool. All right, that joke makes it painfully obvious that I have no clue what cool is. I do want to talk about the Fed in this and what we could possibly see from the markets around that 2 o'clock to 2:30 time. We'll also take a look at some other economic catalysts that we have on trading economics. And I want to finish up with a little bit of commentary on Apple, as it is one of the Magnificent Seven. It's one of the last Magnificent Seven companies to report their earnings. NVIDIA is the only other one besides that, but we have to wait all the way until November the 21st to hear from them. So we'll give further commentary on that in a different video. How am I playing these markets? The Patreon is where you can go to find out. And also my options course that I'm building is over there as well. And then I'll tell you later about the free stocks from Moo. In the meantime, here is trading economics that we're looking at. And if we go back to Tuesday, today you can see the employment cost numbers that we have. Not so bad for us. Consumer confidence, a little bit better than expected, but a little bit worse than last month. And that is a revised number that we're looking at. Tomorrow, 10 a.m., ISM manufacturing PMI, so we'll want to be watching for that one. JOLTS job openings is the bigger number at 10 a.m. So this is one that we want to be watching, because it is possible that for a number of reasons that we open red tomorrow when the market opens at 9:30. JOLTS job numbers, if that number comes in at consensus or lower, I think that we're going to see a slight reverse in the markets. Let it go green for a little while until, let me fast forward a little bit throughout the day, the Fed interest rate decision somewhere around that 1 p.m. time. I think the markets, if we start off low coming into jobs numbers and then job numbers hit, job numbers are good, that can send us upward pressure on the market. We can possibly see it go green or a little bit stronger than it was at least. Get around that 1 p.m. time, assuming that we're up there. And there's a lot of assumptions that go into this. But then around that 1 o'clock time, start to get nervous about the Fed coming out. The market starts to sell off a little bit, starts to settle in, possibly all the way up until Jerome Powell speaks right around that 2:30 time, somewhere around 3 o'clock, that the market actually starts making that quick recovery and get a V shape in the graph coming out for Jerome Powell speaking, assuming that the market is pretty much okay with what Jerome Powell has to say. If he comes out as super hawk, downward pressure on the markets. So talk about entertaining the idea of further rate hikes, not great with us. Even higher than expected for longer, not great for us. Talking about the fact that they're not yet at restrictive levels that they thought they were, that can be very, once again, bad for markets. So those are sort of things that we want to listen to. We want to hear that we're still at restrictive levels, that we still need the time, that we still need more data, the Fed's going to hold where they're at, they're still thinking higher for longer. All those things should be very, very normal for us. Now, if he comes out to hem and haw and seems like he's sort of hesitant and people read that as dovish, that is upward pressure for the markets, and that can be very good from where we currently sit. I do want to say that the SPY, as we look at it, has a little bit of concern in it, and then the Qs, Apple's that holdout right now, and NVIDIA's that holdout. We already heard, like I said, from the other 5 of the Magnificent Seven that are out there. We want to hear from those last 2, Apple being one of the most immediate and pressing that we want to hear from. So let me put down trading economics, and we're going to put up trading view to take a look at the chart as we see it. And you can see it's pretty much a bearish channel that we have for the Qs right now. And we actually broke down below our trend line. That's this white line that you see right across here. And then this yellow line is the support that we had and broke down through it. Didn't make it down to the 200-day, which is actually a really good thing for us. Let me center that a little bit for you so it's easier to view on your screen. There we go. So we broke down below the trend line, below the support that we had, came up, crossed back up above it. So we didn't even have to try out that 200-day, which is right around 330. As a matter of fact, it's 338.54. As I read it, actually, I'm going to go out here. 339.25 is that official number. As of today's close, that we see that happening. The fact that we closed on top of the trend line, that we closed on top of the support, and we have the wick coming out the bottom, it is possible we see more upward pressure, and maybe we're just holding off for some more of that economic data and the Fed to speak for that permission to kind of bounce a little bit more back up from where we're at right now in the Qs as we look at this. So is it possible that we get green tomorrow? Absolutely. We could see green tomorrow. I don't know how worried the market's going to be in the pre-market. We'll see when the market opens at 9:30, how it opens. And the open is absolutely wild. The fact that we have a 10 a.m. catalyst makes me think that we're going to approach this thing low, 10 o'clock hits, we see the numbers, and then the market either goes lower or the market starts to rip right back up. With those jobs numbers that we get at 10 a.m., the markets will recover pretty well from that up until we get around that 1 o'clock time. Start worrying whenever that happens to hit. Start worrying about the Fed meeting. Start worrying about what Jerome Powell has to say. Like, oh man, it's coming. Oh, what's he going to say? Oh no, that GDP was really hot. So we'll see if we get that depression in the prices in the market. So we're going to have to watch for that as we come close to that meeting, as it comes time for Jerome Powell to come out and speak. So we do want to be watching for that on the charts, on the lower time intervals. So especially for you day traders out there, that could be a very lucrative time. Going over to the SPY. The bigger concern here for the SPY versus the Qs, and let me change the zoom here a little bit for you so we can see it all. There we are. So what we see, this yellow line right here where my cursor is currently dancing, that is the 200-day. We've crossed below it, and down here, or up here, this line that's coming down towards it, that is the 50-day. And what we don't really want to see if we're bullish on markets is we don't want to see that death cross get too close. Now, mind you, a very common thing to happen when you break a 200-day is to come back up and retest the 200-day before getting that further drop. So that's something that I'm absolutely looking for. Maybe we get some more green. That brings us up to about 420, 421, which is where we have that. And then it becomes a real test of will we retest that resistance at the 200-day and then get rejected, in which case this thing could fall further from a technical standpoint, or will we go back up and retest resistance and end up punching through it and we get a little bit longer of a rally? Doesn't necessarily mean that the market turns back into being strictly bullish, but it is something that would mean that we'd have a little bit further upside that we could possibly experience. But I would say that we're going to hit some pretty firm support if the market does make it up that high, up to about that 420 to 421 level. We want to be watching for that. If we're able to punch clean through that thing, then it's possible we come back up and retest as high as the 50-day, which is all the way up here, right around that 430 mark. So that would be a pretty decent rally for us. And if I reset the chart view, you can see that even if we come back up to the 50-day, which is around, as of right now, 433, but that'll come down over the next few days, most likely to meet that, given all the other downward price movements that we've had over the last 50 periods on here. That is something that we do want to watch for. Now, let's talk about that 50-day. If we're able to break over that, that is also bullish to break up above that. To actually break this previous high, also bullish, which is right around 440. So those are things on the upside that we can be looking for and hope for. Now let's talk about the downside of this, being that we're under the 200-day, because that is a bearish sign as we look at it. What are these lines that I have on here? Well, this one right here in the middle is 410. We bounced off it pretty strongly and we rebounded pretty well. And so from there, we were at a closing price of 410.68. And then going to today, we closed at 418. So almost 2% up over the last 2 trading days from Friday's close to Tuesday's close. So where's this line down here? This other line is right at about 402, 403. And then what in the world is this white line coming across the bottom? That is actually a long-term historic support. And when you look back here, this is end of 2018. When the market was not so nice, not so great, and then the pandemic took us down below that long-term support as well. And so do we have conditions right now to also put us down below the white line as we come up here? Well, in 2022, when the market sold off so heavily, we broke down through it, but man, oh man, it took from, let's go here, September the 22nd, about that time, all the way until we got to about, looks like October the 24th. And then the rest is history, that we were able to keep that as support, no longer as resistance. And you can see it does not hold as resistance very well, but it holds as support very well. So from here, if we do end up punching down through that 410 and able to make it down towards that 400 line, we have that 402 to 403 holdout for us, that because we have that confluence coming in with this long-term historical support trend line coming through, that can be a good sign for us for where things might start turning around. So if we look at this on a momentum basis through the RSI, I'll zoom in once again, we're climbing back up. We want to see it come up and it cross the 50 to tell us that we have bullish momentum back into this thing. Right now, we're still in bearish territory. A bigger thing to watch for the SPY as we look at this. Let me go to the weekly chart, not the monthly one. There we go. When you look at the weekly and you look at the momentum, we crossed down through the 50-day on that. That tells us about a longer-term trend. And when we zoom in to take a look at the 50-week, we dropped down below it, but we actually closed back above it. So the longer-term trend, this is actually still somewhat looking healthy for us, that we do want to keep an eye on that. There's that same white line that we were looking at, and that could most definitely hold out for us for support. And again, up at the top of that 420 resistance that we have, which can also be pretty solid in the near term, but we're going to have to watch that. And I think that Jerome Powell and Apple and jobs numbers, I would say that that's the trifecta right now, the three things that we want to watch. So let me pop this over here. The Powell speech coming out tomorrow at 2 p.m. Any jobs data that we have, whether it's the JOLTS report that we get, non-farm payrolls, the Challenger job quits, all of that stuff is this week. Those are going to be huge. They're going to be probably wrestling around the markets. And we want the quits to come in high. We want the new jobs to be made to come in low. And that's exactly the stuff, the kind of things that we're going to be looking for, things that kind of break that Fed's case for that higher for longer, because that's reducing that federal funds rate is going to allow, well, sooner, I should say, with those rate cuts, is something that's going to make it a lot easier when we can see that ray of hope, that sunshine coming in sooner. That's where that market really starts to turn things around, can actually rally from there. So going back to the chart for the SPY, this white trend line that I have here, as you look at it, it has held going all the way back from 2018 since its inception, since it really started, and then all the way throughout 2019 we had trouble with it, and then we actually hesitated on it for the pandemic, and then coming back up across that trend line, you can see that we also sort of danced around it for a little bit, didn't quite get to it, support in 2022, broke through it, support. So what's coming up for us? It is possible that we start to get that support. It's possible that we see it as low as about 400, maybe up to 403, and then certainly somewhere between there and 410. I think if we do have to retest that support, I think that is something that we might be able to rely on as we look at this chart and as we inspect it. And this is the weekly chart for the SPY as we look at it. So I did say that I would talk about Apple. Let's toss up Apple real fast. There we go. So Apple has their earnings coming out in the after hours on Thursday. That is November 2nd. We want to watch for that thing. Now, they did put out their new M3 chips at their spooky fast or scary fast event that they had at 8 p.m. Eastern time last night, 5 p.m. Pacific time as they advertised it. And today's reaction to it, and today was a decent day for them. They were up about 1.5%, and for Apple, that's not so bad. That closing price of about 171. I think that we could see up to about 175. Maybe if things were incredible, 180, but I think that starts to get unlikely. So I'd say 175, maybe 177 would be about where you would see that price range go to the upside. To the downside of this, I think that 165 would be probably about right, but we'll have to also see how the market goes from that. We get much firmer support coming in right around 160, and we do have these different trend lines that are on here that are long-term historic support or resistance that we have when we look at Apple going all the way back to 2020. When we look at the chart, let me reset the chart view so that it actually adjusts for us a little bit more. And we actually have this descending wedge pattern that's taking place right here. I can actually pinch that off so we can see it better. There we go. So there's our descending wedge pattern, which can be bullish for us, but we do want to keep the market impact in mind right now with the overall market bias and Apple being a multi-trillion dollar. I think they're right between 2 and 3, closer to $3 trillion market cap. So this is one that its earnings will have that ability to move the markets pretty significantly. So out of the Magnificent 7 stocks that are reported so far, their earnings themselves haven't been horrible. They've actually been pretty good. And then Meta and Google, I know, have been talking about their spending challenges coming up. Microsoft actually sounded pretty rosy about what they had to talk about. Amazon Web Services demand coming out from Amazon, also very robust for them for different companies spend. And they also, with the strong consumer and the GDP numbers, all that stuff has been very good. And it is possible that we see that demand hold out for Apple as well. Maybe they come out and say the same thing that everybody else does. We did see some price cuts coming in to the new MacBook lineup that they have and the different Mac products that they have coming out with the M3 chips. Is that something that they want to ensure that they're hitting the market penetration numbers that they have, that they know that there's a weakening consumer coming out there? Are they losing pricing power? Those are the conversations that you can have around it. But for Apple, I don't think that this is an earnings call that would absolutely obliterate them or break them. And let me show you just one last thing on the chart and we'll wrap up the video. So when we go and look at Apple, if I zoom way out, what I want you to see, maybe you can see them, are just these little green dots that are along the bottom of the screen here. When it's green on this chart, that's because Apple had an earnings surprise on those dates. They actually had an earnings miss. Let me see, earnings miss and a surprise to the downside and revenue surprise to the downside in February of this year when they reported their earnings. But it's been a long time. There we go. Now we have another one. We have to go all the way back to it looks like April of 2016 from their last miss. So Apple's not one to miss very often. Looks like they had some troubling times going all the way back to 2011 and 2012 coming out of the Great Recession. And I know Apple still had their own things that they were working through with that. And the iPhone sales were something that really helped to turn things around. So as we look at this, Apple is not one to miss on their earnings very often. So should we see a surprise to the downside, that could be something that actually drags quite a bit on their stock price, especially in this market environment that we find ourselves. And that can also be something detrimental to the markets. But historically speaking, statistically speaking, Apple is one to really over-deliver on their promises that they have and surprise to the upside over the analyst estimates. So if you guys want to see how I am playing this market, you can get my link to the Patreon down in the description. I post my buys and sells over at the Discord. I also have my NVIDIA earnings and stock price prediction available over there right now. I'll be updating that prior to the earnings, so be on the lookout for that as well. And then also my options course is over there, developing it as we speak. I have some materials worked up for the application side of things. Matter of fact, a 4-scenario case for buy and call options. I think it's very much worth taking a look at that to see how to use them. And I do buy and sell my options through Moomoo, and you get access to that trading platform through the link down in the description. Get up to 16 free stocks. The deposit levels are on your screen right now, $100 or $1,000 for 5 and 15 free stocks respectively. A free share of SoFi at each tier as you look at that as well. And guys, my community through the Discord, they're absolutely wonderful and top notch. We'll see what exactly plays out with the markets coming up. Don't forget about those links, the Patreon link, the Moomoo link, your free stocks. Thank you guys for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.